Hi, everyone, and good day. Welcome to the Lloyd Academy Asia Pacific, Middle East, and Africa Educational Program 2024 August series. My name is Shai, once again, for Market Development Team for Lloyd's Asia, our platform in Singapore. Thank you all for being with us today. We have a very interesting topic about flood claims across Asia, changes since Thailand 2011 presented by two brilliant speakers, Mark Adderley from Crawford, Asia, and David Ford from Tokio Marine Kiln. Mark Adderley is the technical director for Asia and head of cyber for the region at Crawford and Company. He originally came to Asia to assist with the Thai floods in 2011 and has lived and worked in Thailand since 2015. Currently, Mark has responsibility for major and complex losses across the Asia region. Meanwhile, David Forth is a property underwriter with more than 10 years of experience operating in the UK and Australian domestic markets, and for the past 2 years, working as a regional underwriter for Tokyo Marine Kiln in the Asia Pacific region, underwriting property, power, and onshore energy business. Before we proceed with the presentation, please feel free to send us your questions through the comment box at the right side of your screen, and we will get back to that at the end of the presentation. This session is recorded and uploaded online and will be shared once available. Also, please remain until the end of the session to fill up the feedback form and receive your certificate of attendance. And lastly, for me, the views and opinions expressed in this webinar are those of the speakers and do not necessarily reflect the official policy or position of Lloyd's. The information provided is for general information purposes only and should not be construed as professional advice. And with that, I am handing over the time to Mark to begin. Thank you.
Good afternoon, everybody. My name is Mark Adderley. I live here in Bangkok, and I've worked in Asia for a number of years. I work for Crawford, who are an international company of loss adjusters. I've been working for over 80 years with over 10,000 employees working globally. Here in Asia, we have operations in 10 countries. And we are trying to develop innovative solutions to support claims across Asia. Many of the problems that we will discuss today in the presentation are items that we are trying to work with our clients to find technological and innovative solutions to better support the claims proposition to your customers. Today we have a brief agenda, so we'll look at exactly what flood is. We'll look at some of the flood events which have occurred across the Asia Pacific region, and then I'll hand over to David Ford, who will discuss with you the underwriting for flood risk. Then after that, we'll look at some of the practical solutions that can be done to protect against flooding and what mitigation can be achieved if you are unfortunate to have flood damage. So when insurance was first being developed in the 17th and 18th century, the policies were all written on a fire and perils basis, which meant the insurance covered you for very specific events rather than the general all risks cover which we offer now. And the original definition of flood related solely to the escape of water from the normal confines of a natural or artificial watercourse, or lake or reservoir, or for inundation from the sea. So this excluded overflowing drains or runoff from torrential rain on the land. But also, this definition was written at a time when there was not mass hard landscaping, and there was not water control systems with all the underwater drainage that we now have. So over time in the UK, there was a revised definition of what flood was. And the leading case in the UK was back from 1976, and it's a case which most people still follow, and it related to a claim submitted by a policyholder for water in a cellar that was caused by rising groundwater. And the claim was repudiated, and the claimant appealed to the courts, and they supported the decision, and the claimant then appealed to the appeal judges, and they provided clarification on the definition of flood. And it is now generally considered as a large and temporary movement of water. This means that runoff from groundwater, sewers and drains which back up and release their water, that would now currently be considered as flood. And certainly in many areas of Asia, if water penetrates a building through above ground areas, then that would normally be considered as storm. Whereas if water settles on the ground and penetrates the building, then that would be considered as flood. Now, there are several types of flooding which occur on a regular basis. There's river flooding, which occurs when the watercourse cannot cope with the amount of water being drained onto it from the surrounding land. Those tend to be very large mass events. There's coastal flooding, which normally are a combination of high tides and stormy conditions. When you have a low pressure system over a large body of water, such as the sea, then the water level can rise considerably purely due to the low atmospheric pressure. And it's normally a combination of 2 or 3 of these events which causes mass coastal flooding. You obviously also get coastal flooding from tsunamis, but that would normally be considered as earthquake rather than flood damage. One thing is important to differentiate, though, is coastal flooding as opposed to coastal erosion. And coastal erosion is the periodic effects of regular high tides causing damage to coastal areas, as opposed to a single identifiable incident of coastal flooding. Coastal erosion is normally excluded by insurance policies. We also get damage caused by surface water. This is a very common problem in Asia. We get very localized tropical storms, as everybody in Singapore and most areas of Asia will be familiar with, where we can get several inches of rain in a very short period of time in a very localized area, and it completely overwhelms the capacity of the drainage system in the local area. But that can generate very significant flooding very quickly. A similar version of that is sewer flooding. But this is when it's actually the wastewater, so it's contaminated water, which has been inundated. Sometimes you can get problems where the top water and the sewage drainage can combine, and so the torrential rain can then cause the grey water to back up, and this causes significant contamination, which is a further problem when it comes to damage to property. And if this grey water enters the river systems, then there's very significant costs in trying to the remediation to remove the pollution. And the final element is groundwater flooding. And this is where the water level on the ground just rises above the surface level. So this is not for hard landscaping, but this is for agricultural land, but just where the water is completely saturated with water, and it now rises above the level of the ground and causes temporary water flows, temporary rivers and aquifers, which can then cause significant damage in the area. This is based on the United Nations report into the increase in flood risk across East and Southeast Asia. This identified that there was two main problems affecting the flood risk in Asia. And part of that was increasing sea levels. And the other part was the fact that a lot of the major cities in Asia are sinking due to the mass development and growth of these cities, often based on sand and clay. The cities are sinking and the sea levels are rising, and this is going to cause massively increased flood risks across some of our major conurbations. Jakarta is a very good example. The Indonesian government have decided to relocate their capital, partly because of the flood risk in that area. And here in Thailand, they are now estimating that 96% of the capital here in Bangkok could be flooded by 2030 due to a combination of the sinking city and the increasing sea levels. The other flood risk is caused by the increasing amount of rainfall and the number of tropical storms occurring within the Asian region. With increasing in temperature, there's more energy in the atmosphere, which causes more intense tropical storms. And this combined with the effects on El Nino and La Nina, the Pacific-based weather systems, are going to cause more extreme weather conditions. So it'll be more drought, more torrential rain, more flooding, just generally across Asia. Now, we wanted to just have a quick recap on the Thai floods. Many of you may not have been working in insurance 12 or 13 years ago when the Thai floods occurred, but they really were the largest insurance event that occurred across Asia. Most flooding events are a combination of a number of very unusual meteorological conditions combined with some unfortunate human intervention. And Thailand was very much a case of this. We had 4 tropical storms. The reservoirs were full, but Thailand is an agricultural country and we often suffer from shortage of water. So the political forces are they're very unwilling to release water from the dams, because if then there are droughts later in the year, that's very unpopular with the farmers in the area. So they didn't release the water, and then there was a final tail end typhoon that came through, which caused the dams to overtop. And this created a cube of water about the size of the Republic of Ireland, a massive amount of water, which then needed to work its way from the north of Thailand down into the Gulf of Thailand through Bangkok. This water finally arrived about 30 kilometers north of Bangkok in the Ayutthaya area in October. And this flooded 7 industrial estates at a depth between 3 and 4.2 meters. So massive inundation of enormous numbers of highly technological factories. But as under the definition of flooding, flooding is a temporary movement of water. And so that water within the industrial estates would have flowed back out on its way through to Bangkok and the coast beneath within 1 or 2 days. But the local authorities took the decision to block the drainage in the industrial estates in these areas north of Bangkok to prevent flooding of Bangkok. And this resulted in the water standing in the industrial estates until early December. So it was in for between 6 and 8 weeks. in most of these factories, which caused colossal damage to buildings, machinery, and stock. The continued submersion of the items massively exaggerated the amount of damage. Because of the amount of factories which were affected, was very difficult to involve mitigation contractors to help in the way that you would have normally done. Business interruption claims were extended, and there was also a lot of contingent business interruption claims for damage to suppliers and customers, because Thailand was an integral part of the supply chain for many, many items across the world. We had some claims for companies who had 40 individual trading entities affected by the damage to factories in the Thailand industrial estates. And this resulted in the largest freshwater flooding incident in the world, with losses estimated at 46 billion, of which only 12 billion was insured. And these pictures just illustrate exactly how deep that water was and how widespread these industrial estates in Thailand were. It's unfortunately quite a few of the businesses closed, quite a few relocated outside Thailand. A lot of the workers who had worked in the factories but were then laid off for 6 to 9 months, they returned to the rural north, and so there was a shortage of workers. And still today, it is very difficult to obtain flood insurance in Thailand. And usually the limits that people are given are 1 billion baht, about 30,000 US dollars, which is very inconsequential where these factories have values at risk in the billions. We've also had recent flooding in Malaysia. This was a very different event because Thailand solely affected, from an insurance point of view, industrial clients, because there's very little domestic insurance within the Thai market, whereas Malaysia has far more mature household insurance market. So their claims very much involved commercial and domestic clients. There were in the region of 15,000 claims from one day's flooding over a large area, and Crawford received 1 year's work, the number of claims we would normally receive in 1 year, within 2 or 3 days of the flooding happened. So we tried to support our clients by using technology and bringing in additional staff and trying to streamline some of the claims processes to identify small claims as against major incidents, and we helped the clients manage this event. There was a well-publicised flooding in Australia in February, March 2022. This was by far the largest event Australia has ever had. In total, there was 220,000 domestic claims. Australia is obviously a very mature insurance market where most property owners are fully insured. So as opposed to Malaysia and Thailand. So they had a lot more claims, a lot of commercial claims, and a lot of cost. And Australia is also an enormous country, so these claims were spread over a 2,000-kilometre stretch of the Brisbane-Sydney coast. Crawford have a very strong presence in Australia, and we engaged over 600 additional staff, including bringing in 100 staff from Global to assist. We had centralised call centres doing triage to fast track and swiftly resolve the smaller claims. One of the issues in the Australian market is there's a very strict segregation between storm and flood claims. And so in order to identify whether it was storm or flood, hydrology reports needed to be obtained on many of the commercial claims before policy liability could be accepted. And this caused quite a backlog in claims because there was a massive shortage of technical experts who could do this work, together with a shortage of contractors to do the repairs to the building. And recently, the most recent big event we've had was the black rain in Hong Kong. This was called black rain because they have a colour classification system for the weather events which hit Hong Kong, and with black being the very highest. And so they had issued this warning on the evening of the 7th of September, and it was the first time there'd been a black rain warning for over 2 years, and it actually resulted in the most rainfall within a 24-hour period that had ever been recorded within Hong Kong. This caused $500 million worth of damage. But because Hong Kong is such a small island, they have great utilization of subterranean assets. And the main damage in Hong Kong related to basements and metro systems, which are used for housing, for commercial and business usage, as well as to the infrastructure. And unfortunately, there had been a series of storms immediately prior to this. And so by the time the warning was given, there wasn't time for the policyholders to apply their normal flood protections, and this caused a lot of the damage. Okay, so now I will hand you over to David to talk about the underwriting of flood risk.
Thank you, Mark. We at Tokio Marine Kiln certainly felt the full brunt of those Thai flooding events, though in no less a sense that our parent is a large Japanese insurer, and those industrial estates that you talked about had some very large Japanese manufacturers, which produce some very, very heavy losses. So yeah, still very fresh in the brain. Hello everybody, I'm David Ford, underwriter for Tokio Marine Syndicate based in Singapore. I've also previously worked in Australia, underwriting for a large global insurer for 6 years, and also spent 4 years as a broker. So I've walked in the same shoes as many of you on this call. So underwriting flood risk, it's nothing like a few images to help set the scene, and you can clearly see some of the real devastation that these flooding events can cause from those images on the screen there. If you just pop back just one slide, please. They also highlight, just how resilient and creative we can be as human beings in times of disaster. I looked at a makeshift raft which has been built to protect the family pet there, and I always enjoy seeing the image of the young couple speeding through flood waters on a jet ski. Next slide, please. My part of the presentation will be short, but I will aim to highlight some key underwriting considerations to do with flood risk and try to get you thinking a little bit more like an underwriter when preparing your submissions. And why that might help you is because, quite simply, better underwriting information will often result in a better outcome for you and your client. We'll begin with some facts and figures. We'll talk about some ways in which Lloyd's underwriters assess flood risk, and we'll finish up by talking about what information Lloyd's underwriters are looking for in submissions regarding flood exposure. Next slide, please. So some facts and figures. You will see from this slide that globally, flooding is the costliest natural catastrophe peril in terms of economic losses, with an estimated $3 trillion worth of economic losses in 2023. You will also see that in terms of insured losses, flooding ranks only third. So there's quite a lot of information that those two figures alone can help to unearth. But in particular, it really highlights the protection gap in terms of flood coverage around the world. And that's no less prevalent anywhere else than Asia. But it could also be a good indicator of insurers' risk appetite for flood risk in certain areas, which of course changed dramatically in no small part due to the flood events in Thailand in 2011. These stats are taken from the annual Aon Catastrophe Insight report, which I would highly recommend reading for anybody on this call. Next slide, please. Mark would have touched on this earlier. We can clearly see the level of impact the Thai floods had on our industry with huge insured losses. At the time for Lloyd's, it was the third costliest insured event ever, with only Hurricane Katrina and 9/11 being costlier. And just to highlight again that the frequency of major flooding events is certainly trending upwards. Some examples are there on the screen, but there are also many more recent examples, some of which Mark just discussed earlier. And even more recently, we can look to the Middle Eastern flooding events of this year and the horrific flooding in Libya in 2023 are some other clear examples of this. In respect of climate change, there is plenty of scientific research in this area, which I won't attempt to go into in any detail. But in basic terms, warmer air can hold more water vapor than colder air, which increases the probability of heavier rain events. Next slide, please. So how do we assess flood risk? I will state here that flood risk and flooding events are incredibly difficult to predict, and the financial impact of those events, again, is incredibly difficult to predict. But I'll briefly touch on some of the tools that we use and some of the underwriting rationale that we apply to assess and try to remove some of that uncertainty when pricing risk. So depending on the territory and the maturity of the data, we will utilize publicly available flood maps. Some examples there on the screen, which are both Australian flood mapping tools. We like the local government tools because they will have a deeper understanding of the local topography and the built environment. Of course, we use proprietary flood modelling tools such as Swiss Re CatNet, Nathan Finn Flood. And we look at the operational risk of the insured to a flood event. How prone is the insured stock, contents, machinery, plant? How prone is that to flood damage? What's the likely shutdown period? And what are the impacts on the business interruption loss scenario? And on this point, I would say that an insured that has a heavy stock exposure, high gross profit values would be looked at more cautiously in comparison to a property owner where we would only be insuring the buildings, potentially some contents and the loss of rental income. One thing I haven't written down there, but is certainly a key consideration, is our accumulation of risk within a certain area. And essentially that means looking at how many individual risks or risk locations we have exposed within a single event. Again, the lack of certainty around accumulation was a key driver of the insured losses that came through from the Thai floods in 2011. Next slide, please. And just to quickly touch on this point, because it is very important, whilst modelling data and capabilities have improved, in Asia and other areas, there are still significant data gaps that need to be addressed to improve modelling capabilities. At the national and local level, detailed, accurate information on flooding hazards can be hard to come by, which complicates efforts to assess risks and model impacts. So as underwriters, we remain ever reliant on broker submissions, risk surveys and the like to provide detailed risk information so that we can adequately assess flood risk. Next slide, please. So what information should you be including within a grade A submission where flood is a key component? We want to see granular location information, which identifies locations that are situated within a flood zone. We want to know the surveyor's opinion on flood exposure. All too often, we read survey reports where the section on flood will simply read, yes, 1 in 100 year flood zone, or something similarly vague. We want to know what that means as underwriters. You know, what are the building elevations and how do they compare with the expected flood depths? What could a potential flood event look like? And what would the loss estimate be? We, of course, want to know the loss history, but more importantly, we want to know what the insured has done post-loss to help mitigate against a future event. Next slide, please. We want to know about public and private flood mitigations. In New Zealand, for example, following last year's Cyclone Gabrielle and subsequent flooding of rivers, the Hawke's Bay Regional Council was working with the local town councils to fund flood improvement works, increasing flood banks around the region, diverting the runoff water paths to non-residential and non-industrial areas. Tell us about it. You know, these are the things that we want to hear about as underwriters. Just to reiterate, detailed risk information can help to remove some of the uncertainty around risk exposure and can often result in a better outcome for you and your client. And where there remains a level of uncertainty, and with that, a perceived increased level of risk exposure, terms and conditions might be adjusted depending on that perceived level of risk exposure. And as underwriters, we will look at things such as sublimits, increased deductibles, exclusions, and enhanced rating. Next slide, please. So to summarize, flooding is the costliest natural catastrophe peril in terms of economic losses globally, with the frequency of severe flooding events trending upwards. Lloyd's underwriters utilise both publicly available and proprietary flood modelling tools to analyse flood exposure, as well as analysing the operational risk of the insured to a flood event. Detailed risk information, again, can help to remove some of the uncertainty around risk exposure and can often result in a better outcome. And that's a very, in a nutshell, brief overview of how we would look at flood risk as an underwriter. Thank you. Back to you, Mark.
Thank you very much for that. So now we're going to look at just some of the protections that we can operate against flooding. There obviously are area-wide protections that can be put in place in an area where they're prone to flooding. And these are separated into flood management, which is a strategy to reduce or eliminate the detrimental effects of flooding. And this can be broken down into hard engineering, where there's actually construction work done to prevent or reduce the effects of the flooding, such as building dams, relief channels, straightening out of watercourses. But these often only protect the area, and actually just transfer the risk further downstream. So when you straighten a watercourse to prevent a meander where the flooding happens, you're just increasing the flow rate of the water, and this can cause damage further down the line. Although it can solve one problem, it can create others. Soft engineering is more holistic solution to the problems of flooding. Reinstating the natural conditions of rivers, reinstating floodplains and wetlands, growing more forestry, so there's more absorption of floodwaters. These are both very expensive solutions, and in areas where land use is very constrained, can be very difficult to implement. For coastal protection against sea flooding, people build sea walls. They do beach renourishment, where they pump the sand from further out to sea to raise the level of the beach. They build flood barriers to prevent high sea levels backing up, causing flooding on associated rivers. Also, one of the big things that people can do is increase the capacity of the drainage system and improve the routine maintenance. A lot of the flooding that we see is surface water flooding from backed up drainage. And that's often due to lack of maintenance of that drainage. It's very difficult for an underwriter to identify if it's a problem because they're so area specific. But if you allow a buildup of detritus around the drainage of about 30%, then you reduce the capacity of the drainage by 50%. So routine maintenance is very important. Insureds can also improve the specific risks on their properties. Following the Thai floods, the industrial parks raised a lot of the walls and barriers around the industrial estates to prevent the water getting in, but also a lot of the factories have installed flood barriers and hydraulic door systems to better waterproof the buildings against standing water outside. And obviously still people use temporary defences such as sandbags. Sandbags are very effective in keeping out the flooding if it's only a few inches deep. One issue which is often overlooked is actually the drainage and sewer systems within properties backing up, caused by water pressure from outside of the building and flooding back into the property. So it's very important that all these systems have backflow valves to prevent that water gaining access into the building through the drainage systems. A lot of companies also raise the floor levels and put their manufacturing equipment on platforms to prevent damage. And often this was a cheaper option than relocating their factories to other locations. And for storage of stock, raised sillage is very important. when I was training in the UK, it was very common for underwriters to place stillage warranties on stock storage, which required the stock to be stored a certain height off the ground. Through my time in Asia, it's very rare that you see those requirements anymore, but they certainly do prevent damage to the building if you get a flood event. If you have been unlucky enough to get water into your building, then there are obviously things that you can do to mitigate the damage that's going to cause. And one of the most important things is to pump out the water. That was the problem in the Thai floods. The water stood for 6 to 8 weeks, causing massive damage deep into the buildings and the machinery. Also, remove out as much as you can of the wet contents. Strip out unsalvageable building elements. If the walls are plastered, or if there is partition walling which is evidently going to need to be replaced, the more of that you can remove before you start to dry the building, the more effective the building drying will be. And then the drying of the building is a combination of two things: dehumidification to remove the water, and ventilation to improve airflow. The photograph shows a cabinet drying system which is used in Europe, where one cabinet can be used to dry a whole street of flooded properties by pumping in warm air and removing the saturated air back into the container. Technological support such as that is very rarely available in Asia at the moment. And as we get more domestic insurance and more flooding, there's more technology that we can apply to help solve the problems. With plant and machinery, the very most important thing to do when you have water damage to equipment is not to energize it, and also to remember to remove the backup power sources. Most loss adjusters will have had cases where insureds have disconnected systems and then gone back to a row of computers, and every time they turn one on, it short circuits, and they just go along and turn them all on, and they all short circuit, and they prove they're all damaged. If you can dry and decontaminate the equipment before energizing it, the chances of recovering it are massively improved. So don't energize the equipment, remove the surface water, and engage experts in the mitigation and restoration of the equipment. We do have a limited number of international expert mitigation contractors across Asia, but I'm sure those are growing, and local companies are developing their skill base, so there is more assistance available now. But obviously they need to work in conjunction with the OEMs to jointly salvage the equipment. The OEMs and the insured engineers are the expert on that plant and machinery, but international mitigation and restoration companies are the experts on removing water and reinstating the equipment. So if they work together, then you've got the best chance of salvaging the equipment. It's a two-stage process. There's mitigation, which is a stabilization process to prevent any further damage by removing the moisture and contamination. And that buys you time to then fully explore the restoration process, and also enables you to negotiate with the policyholder whilst not having a gun put to your head because the damage is progressing. One common problem with any damage to plant and machinery is warranties and maintenance contracts. The manufacturers of equipment are obviously financially incentivized to want to replace their equipment, and they will often not want to honour the warranties that have been provided on the equipment. This leaves the insured in a position which is substantially worse than that existed prior to the flood damage happening. Now, technically, under insurance, the warranty on equipment is not an insured item. The insurance only covers you for the physical item itself. But from a practical point of view, if the insured had 24/7 maintenance provided to their equipment, and this is now withdrawn, they are in a substantially worse situation than they were before. There's not an easy answer, and this could be a topic for discussion all on its own, but it is something to be borne in mind when you have water damage to plant and machinery. Stock is particularly susceptible to damage. As David was saying, it's a particular issue for underwriters if you have high levels of vulnerable stock, because it needs to be returned to a saleable position, and that's very difficult when you've had water damage. So again, you need to remove the water and control the humidity levels, segregate the damaged and undamaged stock. If you have an agricultural product, then you can reprocess or sell for salvage. If you have minor packaging damage to manufactured problems, you can test and repackage. But most manufacturers are very wary of releasing onto the market potentially damaged stock items. And the proving that stock is undamaged can be quite a testing process for loss adjusters and insurers to go through. Also, often on manufactured stock, the insured, because they're branded products, will have salvage control clauses. So although notionally the damage to the stock is very minor and there could be value in selling those items for salvage, the insured do not want substandard branded products being released onto the market, and so they will insist on those being destroyed to prevent damage to their name and reputation, and that's a very expensive process. The final element of the claim is the business interruption cover. Hopefully your clients will have full business interruption, so then the insurers can help them with this element as well. As a loss adjuster, one of the first things we need to understand is exactly what the timelines are for recovering the buildings and plant and equipment. And then we know how long an interruption period we need to deal with, and we can consider options for temporary premises, for renting or buying temporary equipment, or outsourcing all or part of the production process. And also we can work with the insured and with their suppliers and customers to try and find innovative solutions. My experience is that insurers are very willing to help the insured with the insurance payments to help them mitigate the effects of a business interruption claim. It is always best for all parties if the claim relates solely to an increased cost of working rather than a loss of turnover. Because when a client has lost one order to a competitor, it's always difficult to understand how that might end up, because obviously the new supplier will try very hard to impress the existing client, and it can, over a longer period of time, have very detrimental effects on the business of the insured. So that is all that David and I have provided. If anyone has any questions, please feel free to flag them up.
Thank you, Mark and David. And yes, we have very interesting questions on the chat box. For the first one, hi, Mark. Do you write any natural catastrophe business in India? If so, what is your experience of flood risks in India?
Right, David, are you going to pick that up?
Yeah, the first part of the question, yes, we can. At Tokio Marine Kiln, we can write flood risk. We can write natural resources risks in India. One extremely large loss that we have encountered is there was a huge dam loss in India just last year actually. It was a hydropower plant, and the the extent of water that came down during that one storm, it overwhelmed the dam and caused extensive damage. And there's different parts of India that have different levels of susceptibility to heavy rain and storm events, where a lot of natural resources, power plants are located. For hydro dams, they obviously need a lot of water, and for other large plants as well, they're quite often located near water sources because they need a lot of water through the manufacturing process. So yes, there is certainly a key consideration when we are underwriting risk in not just natural resources, but risk in India in general.
Thank you, David. And for the next question, as there are enormous changes in global climate, as you have elaborated in the beginning, could you provide any enlightenment on how to prevent or minimize flood claims from the client end? So that's the first question. The second question is how do we ask underwriters for big capacity so they are still interested to underwrite flood NatCat? Thank you.
In terms of prevention of flood damage, obviously your policyholder needs to understand the environment in which they're operating. Are they close to rivers or coastal areas, or are what they're looking at is a more urban area where the potential risk is from surface water overwhelming the drainage system? If that's the situation, which is probably exists for most people, then the maintenance of the drainage system provided by the local authorities is critical. So you can work with your local your local councils to make sure that that is done to protect your property. And in terms of protecting your building, flood doors, especially hydraulic ram systems, can create very effective flood protections from water entering. The other thing is, if you've got stock and vulnerable product, then raise it up off the ground. Most flooding is relatively low level. If you get 3 or 4 meters in, you've got to accept you're going to get damage. But most damage is caused at sort of probably 9 to 12 inches. And so if you have stillage and storage, which takes it above that, you can prevent a lot of damage.
Yeah, I'll jump into the second part of the question, I think. I guess the way that we view risk as underwriters is we want to take out as much uncertainty as we can, because uncertainty means we would look at that as a perceived increased level of risk exposure. And what we want to know from clients, we want to know that they understand what their risk is, and we want to know what they're doing to manage that risk. So a lot of the things that Mark just talked about in terms of protecting the asset, and we just need that to be delivered to us in a way that we can understand and that makes sense, and that we can put some some thoughts and some rating and terms and conditions around that. And if it is a higher limit or level of cover that you're trying to seek for your client, then you really need to present that risk in its best light. And if it is a risk that's located within an area that is susceptible to flood, then that's where especially we would want to know what they are doing about that and how they would manage it. Do they have a flood preparedness plan? If there's a flood warning that the site could be flooded in 48 hours, do we step into action? What's included within that flood plan to help mitigate against the loss? So yeah, again, I think better information, more detailed information will always help us as underwriters to provide a better outcome.
Great. Thank you very much, Mark and David. I have another question offline. For David, when pricing flood risk, is there a minimum rate online or return period that you would expect to achieve?
So I think every risk needs to be reviewed on its own merits. And actually, in a basic sense, we used to look at this a few years ago when I was working for a previous employer, and as a very basic sense, we would look at a risk and look at the exceedance probability would be a 1 in 100 year return period, a 1 in 20 year return period, and we would price to that in terms of limit divided by 100 for a risk located within a 1 in 100 year flood area. As we've seen, we've seen multiple 1 in 100 year flood events happening within much shorter time frames. So that's changed that thinking somewhat. And again, every risk on its own merits, but I would say we would be looking for at least a third of that now as a minimum. But we'd also look at things such as deductibles and things like that to try and reduce the exposure. So not essentially a minimum, but certainly we would look to we look at it differently now than we would have done a few years ago, just because of the increased frequency of those major events that have been happening.
Thank you very much. And while we are at that topic, another question. What do you think about return period? Are this still useful for floods measuring? As in reality, such events are usually not on time and in fact are happening faster and more intense due to climate change. So are they still useful?
Yeah, I think they're very useful in understanding that of understanding what the expected flood depths could be in that sort of event. But in terms of actually pricing the risk, we look at them a bit differently compared to how we would have done a few years ago, depending purely based on the frequency of the events that have been happening.
Thank you so much. For the next question, can you explain more about how to separate storm and flood cover?
Yeah, I think certainly in Thailand they would, if you have a tropical storm event which causes damage to the roof, which allows rainwater to come in, accompanied by torrential rain, which overwhelms the drainage and causes water to flow in from the ground level. Most insurers here would segregate the damage caused by the ingress through the roof as storm damage, and the damage caused by the water coming up from the ground level as being flood damage. And they would normally treat them independently on that basis.
Yeah, I agree. In a basic sense, we look at water coming down from the sky as a storm, and water raising up as from the rivers and whatnot as flood.
Thank you. For the next question addressed to Mark, I am interested with your statement for ICW. Always better than loss of turnover. Can you give an example of where the ICW really is effective to help the insured minimize their reduction to TO? Because the insured for sure will prefer to keep the business as usual by selling the activities rather than to stop the sales. Thank you.
Yeah, I mean, from an adjuster, the creative use of increased costs of working is where I think we can often give a lot of assistance to policyholders. I've had cases where we've taken production equipment from the showroom offices of manufacturers to temporarily replace equipment which has 9 to 12 month replacement period. Left it with them for 9 or 12 months and then returned it back to the showroom of the OEM. So that they could continue production. I mean, under an insurance policy, the insurers will pay either for the loss of gross profit or for increased costs which are incurred to avoid that, whichever is the less. But as I said earlier, from the client's point of view, if you lose one order to a competitor, it's very difficult to know where that erosion of your business could finish. And often it will go well beyond the end of your indemnity period. So it isn't you're not doing it just for the benefit of the insurers, but you're doing it for the long-term benefit of of your business.
Thank you so much. And in relation to the difference of the storm and the flood cover, we have a follow-up question. So during the black rain in Hong Kong last year, would that be subjective to storm cover and not flood? What do you think?
I think most of the claims have been considered as flood. I think in Hong Kong, because the rain didn't cause damage to the buildings. It overwhelmed the drainage system and flowed into the basements, causing physical damage. Um, if the winds associated with the black rain had damaged the roof and there'd been some water into the higher levels of the buildings, then I think they would normally be considered a storm. But when the rain hits the ground and then causes an accumulation of water which goes into the building, I think that would normally be considered as flood.
Thank you very much. And I think we have one more question in light of time. The question would be, does Lloyd have internal flood modeling capabilities? For David?
So different syndicates will use different modeling tools, be it internal tools or external proprietary modeling tools. At Tokio Marine Kiln, in certain parts of our business, yes, we do. Particularly on the US side, some of the business we write there is quite heavily dependent on flood models. This side of the world in Singapore, on an individual risk basis, we won't. Whilst we will use flood maps and analyze the exposure, we won't technically model that flood risk, and that model won't spit out a loss estimate, a probable maximum loss, or minimum charge premium for that. We're still a little bit more old school in that we will look at the risk on its own merits and look at the exposures, the stock, the BI, and apply some more old school underwriting as opposed to relying purely on a model.
Right, thank you very much. And I believe we do not have any more time, but we're very happy to entertain more questions offline. So feel free to reach out to Mark and David or to Lloyd if you have any more questions, and we will address that later on. But for now, I would like to thank you, Mark and David, for your time and commitment today and sharing with us your knowledge on the flood claims and providing really great advices on mitigating the risks. It's a pleasure to have you both in our educational program. And thank you as well to everybody who has been joining us for the past weeks. And we will see you again next week. Our topics would be on political violence and terrorism, a case study on discussion on strikes, riots, and civil commotion on the 13th of August. That is next week, Tuesday, same time. And on Thursday, 15 August, we have the topic on fraud and claims, the last year in review. With that, thank you everyone once again. And at this point, I will be sharing my screen for the feedback form for your certificate of attendance. And thank you. Have a nice day, everybody. Bye.
Thank you.
Thank you.
Thank
Bye bye.
you.